Close your eyes for a second. Actually, don't. Keep reading. But imagine this. It's 2030. You're sitting at your kitchen table, coffee in hand, scrolling through your phone, and you see the headline. Bitcoin hits $1 million per coin. Your heart stops. You remember this moment, right now when you had the chance, when someone told you exactly what was coming, and you did nothing. Now flip that. Same kitchen, same coffee. But this time the headline reads, Bitcoin crashes to zero. Governments ban it worldwide. The whole thing collapses overnight, and you lost everything you put in. 2 futures, 1 asset. And right now, in this very moment, Bitcoin is standing at the crossroads of both. My name is Max, and today we are diving deep into the most important financial question of our generation. Will Bitcoin fall to zero, or will it rise to $1 million per coin? No fluff, no sugarcoating, no clickbait theories. Just raw analysis, real data, and the truth that most financial channels are too scared to tell you. Stay with me until the end, because what I'm about to show you will completely change the way you look at money, at Bitcoin, and at your own financial future. Let's get into it. The 2 worlds of Bitcoin. There is no middle ground. Here's something that most people get completely wrong about Bitcoin. They think it's just another investment, like buying stocks in Apple or putting money in a savings account. They think it'll go up a little, go down a little, and eventually settle somewhere reasonable. That is not how Bitcoin works. Bitcoin is not a company. It has no CEO. It has no board of directors. It pays no dividends. It has no earnings reports. Bitcoin is a protocol, a mathematical system, and mathematical systems either work or they don't. There is no sort of works. There is no kind of valuable. This is what makes Bitcoin the most binary asset in human history. Either the world adopts it as the global reserve asset of the digital age, and each coin becomes worth more than $1 million, or the world rejects it, trust collapses, and it goes to zero. That's the game, and you need to decide which side of history you want to be on. Now, let me walk you through both scenarios honestly, because I promised you the truth. But I also want to be very clear about which scenario I think is far, far more likely. And the data will speak for itself. The bear case, how Bitcoin could fall to zero. Let's start with the nightmare scenario. Let's Steelman the case for Bitcoin going to zero. Because if you're going to invest in something, you need to understand the real risks. Risk number 1. Government crackdown. The most common fear. Governments around the world could, in theory, ban Bitcoin. China already did it, multiple times. Other countries have restricted it. And if the United States, the European Union, and major Asian economies all simultaneously declared Bitcoin illegal and criminalized its use, what would happen to the price? It would crash. Hard. People would panic sell, exchanges would shut down, the liquidity would evaporate overnight. And if you held Bitcoin through that, you'd be holding something you legally couldn't use or sell in most of the world. That's a real risk. Don't let anyone tell you otherwise. Risk number 2, a technical flaw. Bitcoin's security relies on cryptographic algorithms. Specifically, it relies on the fact that certain mathematical problems are too hard for computers to solve quickly. But what happens when quantum computing arrives at scale? What if a sufficiently powerful quantum computer could break Bitcoin's encryption? What if a bug was discovered in the core code that allowed someone to create Bitcoin out of thin air? Again, real risk. Low probability, but real. Risk number 3, a superior competitor. What if something better comes along? What if a new blockchain technology is so fast, so efficient, so secure, so scalable, that Bitcoin simply becomes irrelevant? The MySpace to Ethereum's Facebook, or the Kodak to some new technology's iPhone. Bitcoin has survived competitors for 15 years, but history is full of category leaders who got disrupted when they stopped innovating. Risk number 4, loss of faith. At the end of the day, Bitcoin's value is based on collective belief. If enough people stop believing in it, if the narrative breaks, The price could spiral into a self-reinforcing collapse. People sell because others are selling. Panic feeds panic. And an asset with no cash flows and no intrinsic utility beyond belief and scarcity could theoretically go to zero if that belief evaporates. That's the bear case. I've been completely honest with you. These risks are real. But here's the thing, and this is where it gets really interesting. Why every single bear argument has already failed. Bitcoin has been declared dead, over 400 times. Seriously, there's a website called Bitcoin Obituaries that tracks every article, every expert, every economist who has declared Bitcoin finished. Over 400 times. Governments have tried to kill it, hackers have tried to break it, better competitors have tried to replace it, panic crashes have tried to crush it, and Bitcoin is still here. Not just surviving, thriving. Every single 4-year cycle, Bitcoin has reached a new all-time high. Every single one. From $1 to $30, from $30 to $1,000, from $1,000 to $20,000, from $20,000 to $69,000. The pattern is undeniable. So yes, the risks exist. But so does the track record. And the track record of Bitcoin is unlike anything we've ever seen in financial history. Now, let me show you why I believe, with data on my side, that the $1 million scenario is not just possible, it is probable. The bull case, why Bitcoin is going to $1 million. Let's talk about the biggest wealth transfer in human history, because that's exactly what's happening right now, whether you're paying attention or not. The halving cycle, Bitcoin's built-in price engine. Every 4 years, something extraordinary happens inside Bitcoin's code. The number of new Bitcoin created per day gets cut in half. This is called the halving, and historically, every single halving has been followed, within 12 to 18 months, by a massive bull run. In 2012, the first halving happened. Bitcoin went from $12 to $1,000. An 8,000% increase. In 2016, the second halving happened. Bitcoin went from $650 to $20,000, a 3,000% increase. In 2020, the third halving happened. Bitcoin went from $9,000 to $69,000, a 700% increase. In 2024, the fourth halving happened. The new supply of Bitcoin dropped again. And if the pattern holds, even at a reduced, more mature rate, where does that put us? Do the math. Even a 500% increase from the cycle low puts Bitcoin well above $200,000 per coin. A continuation of institutional adoption and global interest puts us somewhere between $500,000 and $1 million. This isn't speculation. This is a mathematical pattern baked into Bitcoin's DNA since Satoshi Nakamoto wrote the code in 2008. The institutional revolution. The smart money has already decided. Here's something that should make every skeptic stop and think very carefully. The smartest financial institutions on the planet, the ones managing trillions of dollars, are buying Bitcoin, not studying it, not considering it, buying it. BlackRock, the largest asset manager in the world with over $10 trillion under management, launched a Bitcoin ETF. Let that sink in. BlackRock, the company that manages more money than the GDP of most countries on Earth, decided that Bitcoin deserves a place in their products. Fidelity, one of the most conservative, most trusted names in American finance, also launched a Bitcoin ETF. MicroStrategy has accumulated over 200,000 Bitcoin on their balance sheet. Nation-states are quietly accumulating. El Salvador made Bitcoin legal tender. The UAE and Bahrain are becoming Bitcoin-friendly jurisdictions. This isn't retail investors gambling on meme coins. This is the financial establishment, the very institutions that once called Bitcoin a fraud, quietly building positions while the public remains skeptical. When BlackRock moves, the world moves, and BlackRock has moved. The scarcity argument. There will only ever be 21 million Bitcoin. Let me put something into perspective that most people have never truly internalized. There will only ever be 21 million Bitcoin. Ever. That's not a marketing slogan. That's code. It's mathematics. It's as close to an absolute certainty as anything in finance has ever been. Now consider this. There are approximately 56 million millionaires in the world. That means there is literally not enough Bitcoin for every millionaire on Earth to own even one full coin. Not even close. Now add in institutions, add in sovereign wealth funds, add in pension funds that are just beginning to allocate, add in the next 2 billion people who will access the internet over the next decade, many of whom will discover Bitcoin before they ever open a traditional bank account. Demand is growing, supply is fixed, and unlike gold, which miners can dig up more of if the price is high enough, nobody can create more Bitcoin. Not governments, not billionaires, not the most powerful computer in the world. The code is set. The supply is capped. This is the most powerful supply and demand dynamic in financial history, and most people are still sleeping on it. The dollar collapse. Why Bitcoin's rise is inevitable. Let's zoom out even further. Let's talk about the real reason Bitcoin was created in the first place. In 2008, the global financial system nearly collapsed. Banks were bailed out with printed money. Trillions of dollars were created out of thin air. And a mysterious person or group named Satoshi Nakamoto decided to build an alternative, a currency that no government could print, a currency that no bank could debase, a currency that belonged to the people, not to the institutions. Fast forward to today. The U.S. national debt has surpassed $34 trillion and is growing faster than ever. Central banks around the world continue to print money when crises hit. Inflation has eaten into savings. The purchasing power of the dollar has fallen dramatically over decades. Bitcoin is the answer to that problem. It is digital gold for the internet age. And just like gold preserved wealth for thousands of years when paper currencies came and went, Bitcoin is designed to preserve wealth in the digital era. When people lose faith in fiat currency, and historically they always eventually do, they look for hard assets, gold, real estate, and increasingly Bitcoin. The question isn't whether fiat currencies will continue to lose value. They already are. The question is whether Bitcoin will be the primary beneficiary of that loss of faith. And the evidence, the institutional adoption, the ETF approvals, the sovereign interest, the halving cycles, all points in one direction. The network effect. Bitcoin is becoming unstoppable. Here's a concept from technology that applies perfectly to Bitcoin: the network effect. The more people use a network, the more valuable it becomes. Think about the internet. The first person to get email couldn't send it to anyone. But as more people got email addresses, the value of having email exploded. Bitcoin works the same way. Every new user, every new institution, every new country that adopts Bitcoin makes the network more valuable and more secure. And the Bitcoin network is now the most powerful computing network in human history. The energy and computing power securing Bitcoin dwarfs anything else on the planet. Attacking Bitcoin would require more energy than attacking a small nation's entire power grid. The network is too large, too distributed, too powerful to kill. And every day it gets bigger, it becomes even harder to stop. This is why the government crackdown scenario, while theoretically possible, becomes less and less likely with every passing year. You can ban an app, you can ban an exchange, but you cannot ban math. You cannot ban a decentralized protocol that runs simultaneously on hundreds of thousands of computers around the world. The psychological turning point. We are living through it. Right now. Something has shifted in the last 2 years that most people haven't fully registered yet. Bitcoin used to be the domain of cypherpunks, tech nerds, and online libertarians. Then it became the domain of early adopters and crypto enthusiasts. Then retail investors discovered it. And now, right now in real time, the institutional and sovereign shift is happening. When your grandfather's financial advisor starts offering Bitcoin ETFs. When Wall Street banks are custodying Bitcoin for their clients. when presidential candidates talk about building strategic Bitcoin reserves, when the conversation has gone from "is Bitcoin real" to "how much Bitcoin should I own?" That is a psychological turning point that cannot be reversed. The narrative has changed. And in markets, narrative is everything. Once a narrative shifts at the institutional level, the money follows. And institutional money moves in amounts that dwarf anything retail investors could ever pump into the market. We are in the early innings of the greatest capital migration in history, from old money to new money, from analog stores of value to digital ones, from trust in institutions to trust in mathematics. And Bitcoin, despite everything, despite the crashes, despite the obituaries, despite the skeptics, is at the center of it all. What 1 million Bitcoin actually means. Let's make this concrete. What does $1 million Bitcoin actually look like in the real world? At $1 million per Bitcoin, Bitcoin's total market cap would be approximately $21 trillion. That sounds enormous, until you compare it to other asset classes. The global gold market is worth approximately $13 to $15 trillion. The global real estate market is worth over $300 trillion. The global bond market is worth over $130 trillion. The global stock market is worth over $100 trillion. A $21 trillion Bitcoin market cap would represent Bitcoin taking a modest share of global wealth. It would mean Bitcoin captured roughly the equivalent of gold's total market value. That's not an outrageous prediction. That's not fantasy. That's a reasonable, data-backed extrapolation of what happens when a superior store of value replaces an inferior one. Gold has been humanity's store of value for 5,000 years because it's scarce, durable, and portable. Bitcoin is more scarce, equally durable, infinitely more portable, and verifiably limited in supply by math rather than geology. If Bitcoin even partially replaces gold as a store of value, not fully but partially, you get to 6 figures per coin easily. For it to reach 7 figures, it needs to capture a slice of the global bond and real estate markets as well. And with 21 million coins total, even a small reallocation from those asset classes pushes the price to levels that seem impossible today, but will seem obvious in hindsight. The final verdict, Max's take. Here's where I give you my honest, unfiltered opinion. Could Bitcoin go to zero? Technically, yes. The risks I outlined are real, but the probability gets lower every single year. Every ETF approval, every institutional allocation, every halving cycle, every new country that softens its stance on Bitcoin reduces the probability of a catastrophic collapse. Could Bitcoin go to $1 million? Not just could, I believe it will. The math supports it. The adoption curve supports it. The halving cycle supports it. The institutional money supports it. The macro environment of money printing and currency debasement supports it. The two scenarios are not equally likely. The zero scenario is a tail risk, a low probability event that you need to be aware of but shouldn't be paralyzed by. The $1 million scenario is the base case, the most logical outcome given everything we know about Bitcoin's supply, demand, adoption, and history. That said, and I cannot stress this enough, never invest more than you can afford to lose. Position sizing matters. Risk management matters. Bitcoin's path to $1 million will not be a straight line. There will be 40%, 50%, even 60% corrections along the way. If you can't stomach those corrections, you won't be able to hold through them. And if you can't hold through them, you won't capture the upside. The people who got rich on Bitcoin didn't get rich by trading in and out at the perfect moments. They got rich by understanding the thesis, buying and holding with conviction through the chaos. The question was never really, will Bitcoin go to 0 or $1 million? The real question is, when it hits $1 million, will you be holding? Go buy me those Bitcoins, and in the meantime, tell me what video you'd like me to make next. See you soon.